All right, everyone, welcome to the latest podcast episode. This is your host, Terry Knight, and I'm very excited to speak to this man right here, Blake Dailey. And oh my gosh, he's killing it in the real estate industry as a whole. As an investor, he's owned several boutique hotels. He's scaling, he offers mentorship and mastermind stuff like that. But I think this man's just killing it, and I think he can help a lot of people out there. So, Blake, thank you so much for coming on, man. Really appreciate it.
Thanks for having me, man. We're starting our morning off well. It's still dark here in Utah and getting a good kickoff to the morning. So glad to be here.
Awesome. Thanks, man. Based out of Utah. I didn't know that. Do you like Utah? Like during
Utah is a
the
super cool state, man. There's a lot to do. Me and my wife's couple goals this year was to get to all 5 national parks that are in Utah, and we've hit 3 so far. Got our other 2 lined up. So there's just so much to see, so much to do. Definitely different from other states that we've lived in because I'm in the Air Force, so we've lived in a couple different states. But yeah, we've got a little bit more time here and excited to explore a little bit more and maybe go back to the Southeast after that. Cool place.
Cool, man. So you mentioned the Air Force. Let's talk about Blake, man. Let people know who you are, where you're from, and your upbringing.
Yeah, so I hit on a little bit. So I'm still active duty Air Force. Got a handful of months left on active duty. We'll be separating early next year in 24. So super excited for that because I've been, basically had 2 full-time jobs for the last 5 years, and it's a lot to balance. But it's kind of how it is when you start out. You have your side hustle that turns in or kind of transitions into a full-time business. That's how it happened for me, and it's just been a lot of fun along the way. So we've obviously been in the real estate industry and started out like flipping homes, doing wholesale, like whatever I could to build up my cash to buy more buy and hold real estate. And it just became short-term rentals. I think maybe we got a little bit lucky with the timing, the market that we started in. So I got stationed in Panama City, Florida for my first Air Force assignment. So a really good short-term rental market, especially at the time. This was 2019. It was still a lot of demand compared to the supply in that market. And we just had a hurricane. So there's a lot of like damaged homes that needed renovation. So they're good BRRRR deals. So that's what we were doing. We were buying and fixing them up, refinancing, keeping them as short-term rentals. And we built that portfolio and then transitioned into boutique hotels after a little stint in commercial multifamily. So got to learn the residential side of real estate, got to learn Airbnbs and how to operate, and, think about your guests and just all the little details that go into running a hospitality business. And then learn the commercial real estate side of things with raising money, structuring the deal, financing the deal, all those things that go into buying much larger real estate, and then transition that into boutique hotels. And I've done 5 of those to date, still own 1. I've sold 4 of them and have number 6 under contract right now.
Cool, man. Good summary, definitely for Blake. He's been in it, guys. Even being in the Air Force, working 2 full-time jobs, that just shows you, if you keep your mind to it, you can do both. It's a lot of work, but it's definitely worth it.
Yeah.
But I'm excited for you to kind of transition more full-time into the whole real estate,
I
man.
know it, man. Give me some more of my time back, and I think it's gonna be a little dangerous,
Exactly.
have focus on one thing, and be able to hit it really hard.
Yeah, man, because you're doing both and you're already killing it. I can't imagine once you hit that
Yeah,
full
I'm just
time.
thinking about like what the acquisition funnel looks like in 6 months of, looking for deals, raising cash, and really just focusing on scaling out in the boutique hotel space, specifically in like drive-to destination markets. I think that's such a hot like subsection of hospitality right now. So like markets that we've been in of Panama City Beach, South Lake Tahoe, now the Smoky Mountains, like all very hot drive-to destinations that other than, Panama City, Florida coastal market have really good seasonality. So it's just year-round demand and a lot of different factors that bring people to those areas. And they're also very accessible for people to get to for, quick weekend trips. Obviously, you have the whole summer break, fall break, spring break, like those big areas as well. So, yeah, I'm excited for it.
Cool, man. Yeah, I'm just making notes here. I got so many questions, but I mean, you're doing amazing things, man. But let's start off with your stint. Like you did multifamily for a while, I think you mentioned, right? How did that work? Like, what made you kind of deep dive into that? first initially?
Yeah. So over our first year, like I mentioned, we were obviously, and I say we, like me and my wife at the time, were really busting it. She was getting her doctorate. She was helping me like handwrite letters to sellers. Like we're doing direct to seller off market deals. And we had a lot of success with that at the time, based on like the amount of action we were taking and like the market timing in that market specifically, of like post hurricane, low interest rates, like everything kind of lined up, and it just and we were hitting it really hard. So over that first year, we had um, built our portfolio to I think 11 units at the time. 8 were short term rentals, and our net cash flow, like after all of our expenses, was more than my W-2 income. I was like, man, this was like my 5-year goal, and I really undersold myself, right? Like we got to go bigger now. So I was like, how can I stretch myself of something, it's like tangent to what I've been doing so far. So I really had this interest in commercial multifamily, especially for like the scalability of it, because I was doing essentially everything myself for those 11 deals. And was, especially with a full-time job, stretching myself thin. Like I was the handyman, like I was the acquisitions guy, I was the sales guy, everything that went into the business other than like cleaning the short-term rental units I was doing with the help of my wife. So it got to the point where I was like, man, I would love to just have a bunch of units in one location, have on-site management, like, the whole perk of buying like commercial multifamily in the 60, 70 unit plus range is it's very scalable. Like everything is built into that business to manage itself. And you really just oversee things as the asset manager. So I really liked it from that perspective. But obviously, as a young guy just starting out, didn't have a couple $1,000,000 to go buy a multifamily property. So had to get good at like networking with investors, raising capital, and putting the deal together. Like finding good deals, finding the right people, and pairing those things up. And found partners that were into the same space, and we could kind of leverage the strength of our team, right? So somebody that found the deal, somebody that was managing the deal, somebody that was raising the money. So we all brought different things to that equation, and we were able to scale faster together. So that's what I started looking for, is like, how do I align myself with people that are doing deals, getting deals, and I can bring a piece of that equation, which at the time was I was both looking for deals and raising money. So I just happened to be like have the investor base to bring it into that deal, and closed it, and rolled from there.
Dang, that's so cool, man. You mentioned commercial real estate. I think that's very key as well because you can scale. Um, like, how much money did you were able to raise during those series to kind of help
I think the
capitalize?
total raise for that deal was like 2.2 million or 2.5 million, somewhere in that range. And then what I brought to the deal was like 475,000, which at the
Wow.
time was like so much money. And maybe that sounds like a lot to some people. And for a first raise, it is, right? Like if you got to go out and find 5, 10, whatever people at $50,000 to $25,000 to invest in the deal. That
Mhm.
was a big lift for me, because I was like unproven as an operator, as a multifamily investor. So it was really, finding the people who I could build the trust with and have them trust me to invest their money in that deal. And luckily, it was a great deal, right? We locked it into the time at like, I don't know, 2.85% on a
Oh,
Freddie Mac loan. So
wow.
is
That's good.
a great deal that worked out. And yeah.
That's pretty cool, man. So you do acquisition, you do sales. How are you finding these deals? Are you just networking? Are you looking online? Is it a combination of both? Like when you're looking for, commercial real estate as a whole, whether it's boutique or just multifamily,
Yeah.
how you're able to locate these deals?
I think specifically for commercial real estate, a wide net is really beneficial to you when you're finding deals. So what that looks like in practice is like, contacting brokers for sure. Because in the commercial space, most of the deal flow is controlled by brokers. So in the residential space, it's much easier to do mailers, do cold calls, door knock, all that kind of stuff, to find distressed homes that have something, whether it be they have like tax liens, or they're behind on their mortgage payments, or there's physical distress at the property that forces or makes it more likely for somebody to sell. So that's harder in the commercial space, one, because there's less properties, two, because it's a higher dollar amount. So what brokers do is essentially what you do in that residential space. They're the one making the the connections with the owners, fostering those relationships. I mean, they might talk to somebody for 2, 3, 4 years before they're ready to sell. For a broker, it's all about like staying top of mind to get the deal when the seller is ready to sell. Not that you can't source off market deals, but most come through brokers. So that would be like a first place to start, especially in like commercial multifamily, because I would say probably 80% plus of deals trade with brokers, if not more. In the boutique hotel space, very similar. So you still want to focus on your broker connections and getting into deals that way, because they're going to have the relationships with the sellers. Now, what you can do on top of that, or to find brokers, is look at online listings. So you can go to LoopNet, where they say is like where deals go to die, but I found 2 on LoopNet. It's all about like looking for value that you can create with your knowledge and with your experience base, or like with your vision of like, all right, I can make this work. So if you're just looking at the surface of what the broker put out there, they're not an investor. So they're not looking at it most times as a way to add value, make a good investment out of it. They're just trying to trade the deal and get it sold, make their commission. So very different mindset of how, they list a deal and what you can find in those listings or in those deals when you dig a little bit deeper and approach it creatively. So Correctly and LoopNet, there's other like niche size like InShopper, Biz Buy Sell. So you can go and find hotel, motel deals, commercial, short-term rentals on sites like those. And then you can also do what I was doing in the residential space is, pulling lists from places like ListSource or PropStream of all your hotel and motel zoning properties. And then, filter out for like a price range or for flag hotels or whatever, for things that aren't really going to fit buying and renovating to like a boutique independent hotel. And then you can mail those owners. You can, search up, do a skip trace, search their address, go knock on their door. You can call them. So however you can get in touch with those sellers. So I think those would be the 3 big lead sources: is brokers, online listing sources, and then finding your own deals and marketing to those sellers, whether it's a cold call or an email or physical mail, snail mail. So those would be like the 3 big ways. And then I think another underrated one is just tell people what you're looking for. So I found 2 out of my 5 and now this number 6 also came out of my network as well. So that's half of my deals that came just from people knowing that I'm in the boutique hotel space, knowing what I'm looking for, and saying, hey, I got a lead on this, or, a friend of mine's an agent. They're listing this deal. Would you want to take a look at it? Or like they have that listing and bring it to you. So like your network and telling people what you look for is probably the most underrated one. And that's just something that, is going to take time, but start telling people what you're looking for, and you'll be really surprised at what actually comes back your way.
Oh yeah, 100%, man. That's crazy. So you have 1 under contract. How many units we're looking at with that one?
This is a big boy. This one's 130 units in the Smokies in Tennessee.
130 Smokies, Tennessee.
Yeah, this is kind of taking it to the next level. This is like bigger than the previous portfolio combined, like all the hotels combined.
Wow. And this was from networking. So with this particular, it's a boutique hotel, right?
Yep.
Is it like run down, ugly looking? It's like you have to renovate?
It's not ugly, but it's run down in its operation and just like its upkeep. So it's a really nice property. It sits on 10 acres, beautiful grounds, overlooking the mountains, walking paths, like mature landscaping and oak trees, and just very, very pretty. But it's got cobwebs under all the walkways and the soffits, and the posts that come down for like the walkway, the second level. Like all of those have cobwebs. Like how many times I'll just walk around the property and just headbutted a freaking spider web and you're pulling it out of your hair. And like, oh my gosh, if I was a guest right now, I'm starting at 4 stars. You know what I mean? Like you do not want to walk through spider webs. And there was a door that was actually like almost sealed closed that looked like a Indiana Jones tomb of like the cobwebs on the door jamb. I was like, oh my gosh, this door has not been opened in such a long time. So it's just not, and they're understaffed. So it's just not operated the best way that it could. And, to the credit of the seller, they got a great deal on it and haven't needed to do much to be profitable with it. But there's so much meat on the bone that I think there's some clear operational things that we can go in from day one and start fixing, of like getting a fully staffed, fully staffed up. I think they have 4 or 5 people for 10 acres and 130 rooms. It's just not enough people. Oof. And then get good staff, train them well, and then the guest service of how you check people in, how you like interact with the people is a big part of it. And then how you, like just the cleanliness of the rooms and having standard checklists and like all the rooms inspected before check-in. So like cleanliness and guest service is a big issue that the property is seeing in their operations. And those are like easy ones to fix that we can go in. And I'm hoping close to double revenue just through those things. And as we like execute the renovation and improve the marketing, then we'll see really big increases in the income. And that's why I really like the commercial space, because how they're valued. So like by pushing up the income like that, as the NOI increases, the value is increasing. So I'm not restricted to what the hotel next to me sold for. Like if my income's higher, I'm going to be worth more. So I can really push the income compared to my comp set and create a more valuable investment. So that's why I really like the hotel space. That's why I like this deal, is because there's a lot of meat on the bone with it.
Cool, man. Wow. Are you guys going to implement like smart locks in that location, or is it standard, just
It actually
key
has
in?
them. I think they just spent $30,000 on new locks like 8 months ago, and they haven't really utilized them. So you can still get the key codes or the key cards at the front desk when you check in. But what those locks have the ability to do is connect to the Wi-Fi, so they're Bluetooth smart locks, and guests can download an app, which is a little bit different than like Schleg or Yale with short-term rentals, to where you don't have to download an app and you just get the code sent to you through the direct messages, which is what we've done on all of our other short-term rentals and hotels. But this one, they'll have to download the app and then just use their phone as the key card. So they'll still get the same functionality of not having to come to the front desk, of like a streamlined check-in process, to be able to book online, go to their room without having to talk to people if they don't want to, but also have like the full services of a hotel, of like having housekeeping and having the front desk staff, having concierge, like all those things that you'd expect in a hotel experience. They'll have access to that when needed. So I think it'll be a really good hybrid model with this bigger property, similar to what we've done on the smaller, with the 10 to 20 unit hotels, but just on a much higher, much bigger scale.
Nice, man. How long did it take you to get down the contract? So you got it networking. Like, how long did it take to get it under contract?
So I think I got sent the deal in like early or mid-May. I underwrote it, or like I did the quick underwrite, just kind of the back of the napkin. Took me like 20 minutes. I was like, dude, this is a good deal. So then I spent a little bit more time, spent like, probably an hour or two digging into the market a little bit more, digging into the rate and the occupancy assumptions. And I was like, man, this deal is really good. So then I think like a week or two later, I flew to see it. And then a week after that, we were under contract. So it happened pretty quick from like the time I got the lead to the time we got under contract. But now we've been under contract for almost 3.5 months. So it's a much longer timeline usually. And we're originally supposed to close this month. So typically from like contract to close period, it's about 90 days for your due diligence, your inspections, your financing. In the commercial space, the financing takes a little bit longer. And then we were working with a local bank, and they backed out because their balance sheet was just a little out of whack, and they had too many loans that they wrote in the 4% and 5% and sub that, like in the 3% over the last 2 years. So trying to get out of hospitality, out of restaurants, out of retail, and get and loan more on conservative asset classes like multifamily or industrial, or definitely single family houses at today's 7+% interest rates. So they have too many loans that they're losing money on, and didn't want to take on a higher risk hotel project. One, because hotel is a riskier asset class, and two, because it's construction. So it's like the two things lined up that you don't want, or that lenders don't want right now. So what we did was went and found a USDA lender, because it's technically in a rural area, and that just takes longer to get through like the bank underwriting, and then it goes to the agency, which is the USDA, and they do their own underwrite and loan application. So that process alone is like 2 months, and then it's like another month or two to close. So we got an extension to close in November now. So we're just pressing on for that.
Cool, man. Awesome. Congrats to that. So normally, I guess in the boutique hotel space, like if they have too many mortgages, whatever, this is the whole issue you're running into. Certain sellers, if it's a smaller, I think, project or doors, they either have it paid off, you just kind of do seller financing approach. Um, obviously, do you find it easier to find those type of deals, or like this big one that you're kind of having to go through a bank, or does it just is it just preference in your opinion?
Yeah, I think that's such a big perk of this space. And we've got, I've done 3 of my past 5 deals as seller financed. So they were, I think they were in between 10 and 15% down. And the
Mhm.
interest rates were in between like 4 and maybe 5.5 or 6. So all low down, good fixed interest rates that were interest only. So we could get through the construction phase, get through the, the renovations, and get the property stabilized. So that is a huge perk. I mean, when you can get seller financing, you don't have to jump through all the hoops of a bank. You don't have to do a loan application. You don't have to get your credit pulled. You can literally negotiate between you and the seller of what works, and get the deal. And you just pay them every month instead of paying the bank. So seller financing is awesome. And the reason I couldn't do it on this property was because they got a loan on it in 2021, and I think they owe like $3.5 or $4 million on the property. So they were smart, right? They're using leverage and maximizing the return that they're getting on the deal. And a lot of the hotels that you'll go find are mom and pop owner operators that have owned the property for a long time. Like a lot of them are retiring boomers right now. So they bought these hotel deals 10, 15, 20 years ago, have a bunch of equity, have them paid off or very close to being paid off. So mine was unique in that this guy had just purchased it, but all of the other ones, I think the average, well, we had one that a group bought it from a mom and pop owner operator that was the same situation, but they couldn't do the renovation. They ran out of money. But all the other ones were like the average length of ownership was like 12 or 15 years. And they all had owned the property, all had lived on site, all were, owner operators, like true owner operators. And then the one that we bought that was purchased like 6 months before from a seller with that same situation, and they just kind of like fizzled out and couldn't do the renovation. So we bought it from them because they had some distress, and we were able to help them out, and we got a pretty good deal on it too. So yeah, I think most of this is the first one that was I would say a little bit more sophisticated investor, is in that they're using leverage. They don't live on site. They have even though they're understaffed, they have a team. And then the opportunity here was really to the operational and the operational improvements and the property improvements for like the amenities that we're adding. So we're adding like a pavilion, outdoor bar, pickleball courts, putt, an outdoor movie screen. Like it's going to be a really cool property. Fitness center and game room. So like we're loading this thing with amenities because 130 rooms, and right, like our price per room for these amenity additions are very, very low. It's like the benefit that we're spreading over all the people that are going to stay in this property is very high, right? It'd be hard to do all these things at a smaller property, or like impossible to do as a single family house, because you just want to get the return on the investment you're putting into it. Even though, they'll drive up your bookings, you'd show up with more searches and stuff like that, just wouldn't be worth the money. But on 130 rooms over 10 acres, it's a $7 million purchase, and it'll be worth like 14, 15 million once the renovation's done. We have, the like the economics in the deal to put $3 million into it to get it up to that value to really increase the rates that we'd see on it.
That's crazy. That's crazy. So you definitely going to get it to, once you refinance it, 14 to 15 million. How long will that take, you guys think, to kind of renovate that property to
So it
your
depends
standard?
on the rates that we lock in with the USDA loan. So the USDA loans, they sell them on the secondary market. So basically they'll package all those loans and then sell them to investors who buy them for the yield. So they want them to be longer term loans, so they have prepayment penalties on them. So what we're looking at is a step down rate of like a 5.4321. So 5% in year 1, 4% in year 2, 3% in year 3, and on, or like a 10, 10, 10, 1, 1. So like 10%, 10%, 10%, and then 1% in year 4. So we're trying to weigh if we want to do like the refi in year 3 or 4 and pay like the 3% or the 1%, because essentially it'll be about 30 months before actually, so about 2.5 years before actually ready to refinance. Because from the time that we close and do the renovation and get done with the renovation, that will be about 6 months. So then we're looking at 12 months after that, because you need 12 months of stabilized financials for of like your, improved financials to be considered stabilized by the bank. And a lot of them also want to see tax returns as well. So that's going to put us into the second year minimum at like the 18-month mark. But to really maximize the refinance, especially for a conventional commercial loan, you're going to go with like a local or a regional bank who's going to give you the best interest rate and, the highest, leverage depending on what you want to do. We're actually going to refinance at like 65% LTV instead of 70 or 75. But to get those loans, or to get the most competitive loan product from those type of banks on the back end, you want to see at least 24 months. So that means 24 months of your improved financials and at least a year or two of your tax returns, so that they can prove the income and see that, hey, this property is actually performing at this level. So we'll use that to, determine our DSCR basis, which they want to see at least like 1.2 to like 1.4 in the hospitality space. But this deal will be like 1.6 or 1.8. So it'll like, meaning the debt service, or like the debt service coverage ratio looks at the net operating income compared to the debt service. So the higher your NOI compared to the debt, the higher your DSCR. And that's good for banks because that shows that the property covers the debt that you're putting on it with a refinance. So that's why we're looking at probably minimum in year 3. So we could refinance in between like year 2 and 3. But if we wait till year 4, we could buy that interest rate or that prepayment penalty down to 1%. That'll save us like 150 grand in just points.
Yeah.
So that's the play with this deal: is buy it, renovate it, refinance in year 3 or 4, get almost all of the investor capital back through the cash flow and the refinance proceeds at that point, and then we just hold on, because it'll cash flow like $800,000 a year after all the expenses after that. So it's like, we'll sell when we get the best offer, but let's just hold it for cash flow because the investor will be paid back.
Yeah, man, makes sense. Holy crap. You mentioned you can write deals left and right, on a napkin, you said, on the back of a napkin. What's your process to writing a deal, I guess?
Like underwriting? Yeah, I would say some rules of thumb that I think are really helpful is like your price per door, like both of purchase and your like stabilized value. So you could look at, to get what you expect the property to be worth. Look up hotels that have sold. You can use CoStar, you can use Crexy and look at what's sold, or you can, even just do a Google search or talk to brokers, like find those sale comps to say, all right, out of these 5 hotels, they sold at $150,000 per unit on average. So that kind of gives you that rule of thumb, right, of what it could be worth on the back end. And then if it's listed at, excuse me, if it's listed at $100,000 per door, then you say, all right, I got $50,000 of spread in this deal. So then, like, what do I got to put into it to get to that point? Say it's $20,000. So now I'm all in at $120 a door, which, you could refinance at that value, get your money back, and then hold on. You've got the 30 per door of equity. So that'd be like 80% leverage. So you can look at your purchase price per door and the stabilized price per door to kind of gauge if it's a good buy or not. And then another rule of thumb for like the back of the napkin underwriting is just like assuming somewhere between a 50 and a 60% expense ratio for your deal. So I think typically it's going to be a little bit higher for smaller deals because more of your revenue will be going towards expenses. So for a 10 unit or under property, you might pay closer to 60% in your expense ratio. So 60% of your income will go towards paying the expenses, and that's before debt. So like your expense ratio is essentially your NOI. And you take out your debt, that would be your net cash flow. So now, because interest rates are higher, the debt service is higher. So that makes it hard on a 60% expense ratio deal to get enough profit to make the deal worth it. And then on something that's a little bit bigger, say, 20, 30, 40 units, you can have a little bit lower expense ratio because you're spreading out the cost over multiple units, and you can drive, your revenue is higher with more units. So that's kind of like the rules of thumb is like, if you're looking at, say, like a 20 unit property, maybe put in a 50 or a 55% expense ratio to see like what the estimated NOI would be. Take out your estimated debt service, like depending if you're going to use a commercial bank, you're probably looking at 8% right now. Or if you're going to use a hard money loan or a bridge loan, which is really common in the hotel space because the best deals are usually value add deals. So a bank's not going to want to touch it if you've got lower income and you're basically buying on the projections of what you can do with the deal. Then you're going to need, hard money, bridge debt, to get into the property, and then you can refinance out of that pretty quickly in a year or two. And that's going to kind of taking those figures out is what gets you to your kind of net cash flow or what you could expect. And this is estimated, right? The rules of thumb. So that if I'm looking at a 20 unit property that'll do 800,000 a year, I'm going to use the 50% expense ratio and say, okay, that's $400,000 a year in NOI. Now, if I have a $2 million loan at it at 8%, then I would take that out to get to my net cash flow and just estimate, all right, I got to put 30 to 35% of that purchase price down plus the repairs. Okay, so I've got 100,000 left over at the bottom of net cash flow. I'm putting, say, $1 million into it. So that's a 10% like cash on cash return. Just, really quick head math to do it like that to see if the deal's even worth going to the next level to spend, the hour or two it'll take to actually go in and, really do research on the rates and the occupancy, really get clear expectations with the expenses, the operating expenses that you'll see to really like vet the deal. So I like these quick rules of thumb of like the purchase price per door and the expense ratio test to see if it's worth pursuing.
Cool, man. Well said. You guys hear it. That's a really good way to kind of.
Yeah, I was going to have to be like a backup and listen to that one more time and maybe write these numbers down. But I've just done this, a bunch
so
of
many
times. So I can just flow through it.
Clockwork. And that's what you want, guys. Just like what Blake's doing. Just do it like it's nothing, basically. You mentioned 50% expenses, right? You familiar with how that works with smaller deals. Do you think that can go lower based off, hiring less and doing more remote, hands-off automated things? Or do you just kind
I
of...
think the lowest expense ratio we were able to have was like 45 or 48%. So it's still close to the 50%. And you can definitely lower that by doing more. But I think the whole draw of boutique hotels is to really get to a scale where you're not the one doing everything. Like if you're going to step in and replace the owner operator of running the business and do everything, like you probably don't want to get into hospitality because you have the demands of the guests, right? You have demands of investors. If you're raising money, you have the contractors and all the work you're doing to improve it, both in the design, the furniture, the physical condition of the property with CapEx. So there's so much that you have to do already outside of the day-to-day operations. So what's cool about boutique hotels is with one deal, you can get enough revenue to outsource and get your property manager and get your admin and your e-concierge team who's like your guest messaging and answers your question, does your resolutions, does your change requests, all that kind of stuff. You can get one deal, put all those people in place, and then you're not doing the day-to-day management. Then you're focused on like top line revenue, you're focusing on sales, you're focused on your marketing to really drive the business forward. And then as you scale and get to your next boutique hotel, then you can hire a revenue manager, then you can hire a marketing person, then you can hire a director of operations to manage your property managers at the different locations. You keep scaling yourself up, but you're doing it in big jumps. So, with 1, 2, 3 deals, you can really get out of the day-to-day operations. So with the 5 deals that we had and a few short-term rentals, so like the ones I personally own, the one smaller hotel and then the 4 houses, we just charged myself a management fee to the business. So really most of the revenue is coming from the 4 deals that we own together, me and my partner or former partner. With those, we had enough revenue to hire a full team. So we had property staff, maintenance, property managers, assistant property managers who are like in-house W-2 property managers for our company. We had our e-concierge, we had our cleaners, we had a revenue manager, we had a director of operations, we had a marketing person, we had a head of our e-concierge and virtual team, and an operations manager. So we had like 25, 30 employees in the business, and it, realistically took me probably 4 hours a week to manage the business and lead the team. And then the rest of the time was focused on like process improvement, looking for deals, really trying to make things better. But just to sustain and maintain what we had, 4 hours a week and making, like top line gross revenue, 3 million a year. So you can get to that level with a handful or less of deals. That was essentially 4 deals that we were doing that with. And really we ran heavy and got there with 3 deals. The 4th deal that we added on, because it came on in phases, was really when we got to like, all right, now we got a profit margin with all this. So we wanted to like get there quickly, hire out the people sooner so we didn't have to do all that work ourselves and really get efficiency. So yeah, that's the cool part about it, is it would take you, I don't know, 20, 25 houses maybe, depending on what kind of like properties, what kind of short-term rentals you're buying, to hire and build that level of team out to where it's really, really efficient. Then every subsequent deal is, a minimal increase in effort across the board, right? And then you just add, another position or two based on what your need is or what your current bottleneck is. So once you get the foundation, you can really tap into your acquisitions funnel and fuel your business with more deals without having to like run around crazy with your hair on fire because you already have everything set up. So that's a really cool thing about the boutique hotel space that I like about it, and that I show other people the benefits. Like if you're in short-term rentals, that's awesome, right? You can 100% get the financial freedom with short-term rentals. I did it. I still had the Air Force job, but if I didn't, I would have been like cruising on a sailboat until I ran out of money and had to come back and buy more short-term rentals. But like you can get there pretty quickly within like a year or two. I did it in a year with short-term rentals, but you want to scale and go up to the next level and really create a business out of it. Much more efficient to do so with bigger deals, just like the differences of like commercial multifamily versus single family homes. The difference is just like the mindset and like the belief of I can go do that. It's not that crazy. Like I got into it with not that much experience or knowing what I was doing. There's so much more like education and material and content out there today than there was when I started. Like I would have loved to, just jump on Instagram and learn how to operate a boutique hotel back in the day, but I had to figure it out myself.
Yeah, definitely, man. You kind of deep dive into it now. You're pretty much an expert, man. Like the ins and out, and how
Trying to be, man. I still feel like I'm learning every single day. I get to something new. I'm like, man, why do we not have a system for that yet? Or like, something like that happens. I'm like, dude, I gotta go learn this thing, put it in the business, and then can talk about it after.
Exactly. No, but you're always curious, man. So I think that's the good thing. You're always curious, willing to learn, improve, and that's how you are where you are today, which is pretty cool, man. A lot of people don't talk about this, but in the boutique or hotel space, right, revenue is important, I would think, to hire and build out your team, right? Operations wise, like you want to drive as much revenue versus, I guess, figure out your occupancy or try to drive less with more ADR. If that makes sense. Like, how important do you think that is?
100%. So I hear like 2 different schools of thought on this. Like I'll hear people talk about like maximizing your ADR. Like you want to charge the most for like the high season and the events in your area and all that kind of stuff. But what your expense can be is the occupancy. And then I hear people talk about you want to be as occupied as you can. You want to get long-term reservations. You want to be, 95% plus occupied. But then what your cost is your ADR or your rates that you're charging to get to that higher occupancy. So instead of looking at just your ADR or your occupancy as independent variables, I think the better metric to look at is your RevPAR, your revenue per available room, or RevPAR, revenue per available listing, like whether you're like in a multi-unit or single family houses. So your RevPAR is your ADR times your occupancy. So if you have $100 ADR and a 50% occupancy, you have a $50 RevPAR. So what your job is as the entrepreneur is to really push the RevPAR, which equates to your gross revenue when you multiply it over your available nights or your book nights. Sorry, we multiply it by your book nights and your number of units. That is your gross revenue. So that's what you're trying to push up. You're trying to increase your RevPAR by pushing rates where you can and getting higher occupancies, keeping in mind that, as one goes up, the other usually goes down. Unless you're in the high season, you have a ton of demand, then you can charge high rates and have really great occupancy. But how you do that over the course of the year on a 12-month scale, because it's seasonal and short-term rentals, you really want to focus on the RevPAR. So in our business, we have our KPI dashboard. We look at our ADR, occupancy and our RevPAR every single week, and we're making tweaks daily based on that like weekly output of our data. So we're trying to like optimize all week so that next week when we have our team meetings and we look at our metrics, we want to be improving. So we're also looking at our booking lead time, our average length of stay, our number of reservations in a week to really maximize each metric through our rates, through our marketing efforts, through our listing optimization, right? Depending on how well our listings are converting and performing with their views and their bookings on the platforms. Like we look at all those things to push our RevPAR, because that is the true metric that's like is how much money you're making for each room.
Nice. I think that sums it up. You mentioned KPI dashboards. Do you guys use a particular software, or is it just Excel?
We built our own. So we have we just export the raw data from the Guesty dashboard and like from our Airbnb bookings, and we basically put that into like data tables and pivot tables and aggregate that to show our OPR every week, our RevPAR, occupancy, our ADR based on the actual data from our reservations.
Oh snap! You built your own. Damn. Okay.
Yeah, we can't rely on the third parties like the PMS systems and Guesty. Like even with Guesty's advanced analytics, you pay a lot of money per listing for that every month, and it's still not that good. You still can't like filter for what you need, and that's like the one gap I think we've seen consistently with all the PMS systems and third party software that we use. We're like, screw it, we'll just build our own and train our team how to use it and put the data in.
Wow. Did you guys find this like a developer to build it out, like on Fiverr or Upwork.com?
So essentially it lives in a Google Sheet. So we had an office manager who's like virtual in the Philippines, like virtual office manager, who is really good at spreadsheets and data. I think they have a data analytics degree. So we just kind of gave them the requirements and what we're looking for, and then went through, dozens of iterations to get to the final product that we use today. So it's just like a process of identifying that bottleneck of, hey, what do we need to do to fix this thing? Let's put a system in place and a process to like streamline and make it more accurate for what we're actually seeing on our data.
Cool. Dang, man. Blake, man, you're taking it to the next level, man. I never even heard of anyone creating a KPI dashboard. That's crazy.
Sometimes you got to, man. When you're doing like millions a year, you're like, all right, we got to make sure where our money is going, where reservations are coming from, and what is really the driving factors of our business. Because if you don't know your numbers, like so many people talk about their ADRs and their occupancies, and then not even know what RevPAR is or how to calculate it. So you got to know your data to know what you're doing is working and how to improve it when you're trying to, get more out of the business.
Yeah, exactly. I totally agree with that. We're slacking on our KPI dashboard, so this is like a kick in the face for me, but I definitely got to jump on that. So one thing I was always curious, man, like your percentages with OTAs and direct bookings. I mean, you're in the boutique hotel space anyway, but what's the breakdown for that for you guys?
So I'm actively working on getting better at this. And we really started a push like mid last year where we were like 90% on Airbnb and probably another 3-4% on like Expedia, and then like 5-6% on Booking. So we're just on those three. And I was looking at our data and our metrics like, man, we should be doing better. Like we should have a better spread, and we need to be pushing. And we're probably like 1% or 2% direct bookings. And I was like, this is kind of trash. I'm like, we're still doing a couple thousand a month on direct bookings, but it's like 4, 5, 6 reservations tops. So that's when we started doing more email marketing. We changed all of our listings and our profiles to really try to convert to more direct bookings. And then we got up to like 11, 12, 15%, depending on the property over like I think it was like a 6-month time frame of, so use StayFi, we collect all our guest emails, then we do our automation campaigns through there because they have an email integration that's super easy to use. So then all of our guests, we get their data and we market back to them to turn them into repeat guests and get them off the platform. And then the other thing we would do is we would put the property name of the hotel in the listing description, and then we'd have our like company name in our profile. So like wherever the guest went and clicked on, they would, read about our business or read about the property name. And then if they Google search that, they would find us on Google. So we'd have our Google profile set up with our own direct booking website. And then once we spent money for like a good direct booking website that had SEO and would aggregate our reviews, then we started getting ranked up towards the top of the page in all of our markets. And then we were getting organic traffic to the website because whether we had those Google reviews that were getting reviews on them, and the website was getting visited more from people going off the OTAs to the direct booking website, it was increasing the SEO and the performance. We're getting more views and searches, and then that was increasing our direct booking percentage as well. And then I sold the business earlier this year, and then we're in the high season, so I didn't do as much of it. And now we're getting back to the direct booking stuff now.
Damn, cool. Yeah, I hear you, man. Google My Business profile, that's important. Google reviews is also very important. How are you guys driving reviews off platform? I don't think Airbnb flags that, I would think, right? With
No,
links.
so yeah, if you send a Google link, that's not flagged. But like if you send your direct booking link, it will get flagged and you could get your account shut down. So definitely do not do that. It's not a risk and reward is not equal there. So what we do is we ask all the guests who leave us a 5-star review to also leave us a review on Google. It's like, hey, thank you for leaving us a good review. Because of that, we'd like to offer you 10% off your next stay if you also leave us a Google review. So then that has been driving increase in our Google reviews to where we probably get, I need to pull the actual percentage and find a better way to track this, but we probably get a third of the people who leave us a 5-star review on Airbnb to also leave us a review on Google. And based on our conversion, we get about 80% of our guests to review us on Airbnb, which is a good percentage. And now like when our reviews are falling below like 4.77 or 4.75, I'm like, all right, we need to increase the number of reviews total that we're getting, because if we get one bad review out of 5, that drops us below the like superhost status. I'm like, push that number up, and then as that number goes up, the Google review number will go up as well. And then all the people who book direct with us in our automated message flow, we just direct those people to leave us a Google review, because that's essentially the only place their review would matter. So that's how we have the differences. Like people who book direct with us, we just ask for the review on Google. And then out of Airbnb, all the people who leave us a 5-star, we also ask them to review us on Google, and we'll do that through the automated messages with that review link. And then we'll do a follow-up with a text message. So that has helped our conversion as well.
Cool, man. Well said. What's your tech stack, I guess, for your hotels and STR? You mentioned Stay5, Guesty. Guesty's pretty awesome. Guesty for pros, that is. But
Yep.
like, what do you guys
So we
use?
use Guesty for pros as our PMS. We use Ring Central for our call service for like calling and texting our guests. We use Wheelhouse for our dynamic pricing. I've been testing that out this summer for like the last 4 or 5 months. And I like it. We used to use Price Labs. I think they're both very similar. Wheelhouse has some different features and data aggregation that's pretty cool.
Yeah.
I'm trying to think what else. We use like Slack for our internal communication with our team. Obviously like Google Drive for all of our storage. We use Notion for like our mind map of our company and all of our processes and our checklist and things like that. So Notion, I think, is a really important one for us. Yeah, I'm blanking. I know we use a few more softwares, but that's what I can think of right now.
I know, right? Stay5 is one of them you mentioned.
Stay5, yep.
Trying to think.
You want to think about it, but Grammarly, we use Grammarly. So for all of our e-concierge team that does our guest messaging and stuff, we have all of them install that plugin so that as they're messaging guests, like they get the feedback of how to change like their context or their verb choice or whatever it is that makes them sound more natural. So that's a helpful one for us.
Cool. Do you guys use like Ring, any Noiseware type of devices?
We have one at one property because we kept getting parties for whatever reason, but we really haven't had an issue with ours, just based on like our listings, our descriptions, our communication with our guests, like before and during like the check-in and the reservation. So we haven't had a big problem with it and a need for Noiseware, but we did get one because we had like, I don't know, probably like 4 parties in 3 months. And I was like, what is it about this house that people are booking and having parties? And of course, this is the one that has like the neighbors. It's like, we're calling the cops. Like this, this neighborhood's so quiet before it was a short-term rental. And I was like, you guys realize I lived here for 2 years and it's a 2-unit property. Like we had short-term rentals there the whole time. It's like, don't just start complaining now all of a sudden. I was like, we're, paying our bills and paying our people with the short-term rental income. So it's not just greedy entrepreneurs trying to ruin the neighborhood, but it's all right.
So funny.
But we do use it. I think I forget the name of it, but we do have a noiseware at that one house.
Cool, man. Cool.
And then the smart thermostats, we have Nest at all the houses.
Nest, okay. Yeah, we use Sensei, but Nest is pretty good as well.
And then smart lock. So, remote lock. So that connects all of our smart locks with our PMS and sends the automatic codes to guests.
Okay. Yeah, I heard good things about remote lock. Guesty offers Guesty Lock Manager now. You may want to check that out as well because they offer
I think that just came out not too long ago, and we looked at switching it, but I think it was more expensive.
So I'm gonna give you a tip here to everyone here on the episode. But yeah, Guesty's offering a new package. It's called Guesty Ultimate, and they bundle the lock manager and a few other things that you use, like the advanced analytics and stuff like that.
Guesty charges people makes me so mad. They have like all these different add-ons. I'm like, this should be a core service. Like the data analytics is a good piece of it. It's like, you want to charge me to get my data that you guys are already collecting out of the reservation system. I'm like, you guys are so stupid. And then like the lock stuff, well, I get it because that's like another service that you could use from somewhere else. But then like the revenue management, the connect with my like with Google vacation rentals, like they just have a fee for everything. Like I don't know if they are not meeting their quarterly projections to investors or what, but they just want to charge you for everything.
They do, but I would definitely check out the ultimate package. It's just one price for a bundle of those features, which is very affordable.
Message my account rep for that.
You should. But yeah, Blake, man, thanks, man. You've really like blown my mind with this whole boutique hotel space thing. For anyone that wants to reach out to you, right, for mentorship or coaching program or masterminds, or just questions in general, and follow your story and just your stuff online, what's the best place for that?
Yeah, I'd say the best way to get a hold of me is just Instagram. So if you guys got questions or looking to get into boutique hotels or have a deal, would be happy to help with that stuff. But yeah, just shoot me a message on Instagram, pretty active on there, and we'll get back to you. I actually still do my own messaging, so I see them and we'll message back.
What's your Instagram handle?
It's at Blake J. Dailey.
Okay, you hear it there first, guys. I'll have it in the notes, the podcast, YouTube, everything. To reach out to Blake. This man knows everything about this whole boutique side of it. And what's your future goals, man? Like, you guys are going to close this property in November, but like, what's your goal in the next, I don't know, couple of years, man?
Goal for 2024 is just to go big, man. So I'll be out of the Air Force in January or February, just depending on what that out date looks like. And I think there's probably a fund on the horizon for buying more of these boutique hotels and drive to destination markets that have like value add components, buying them from mom and pop operators, retiring boomers, and really maximize the amenities and the marketing and the operations to really make them into cool properties that are marketable. You know what I mean? That are like an Instagram worthy stay, because those are so much easier to market and get inherent demand for. And then when you combine that with good operations, good marketing, and a whole good system and a business that operates really well, I think the sky is going to be the limit with that over the next couple of years. And then I don't know, we'll see. Maybe package up all those properties in 4 or 5 years and sell them to private equity and retire into the sunset at 31, 32. We'll see.
Oh, good, man. Awesome. That's a pretty good goal for me. I mean, getting all that done. Lastly, though, to end the episode, I always like to ask guests this one question. What keeps you going every day when you want to give up?
Oh, man. It changes. Sometimes it's ego. Sometimes it's thinking ahead to future me and wanting to be proud of the effort I put in today. Because I don't want to have regrets in the future and look back like, oh man, I could have had a cool life, or I could have had this, I could have had that, and be unsatisfied based on my effort up to that point. So I never want to, maybe it's like the athlete in me, but I never want it to be a matter of like my own preparation, my own effort, and my own execution. So I'm okay with losing, right? Like as an athlete, I've lost a ton of games, but I've never went in and not tried my hardest. And when you lose at the end of the game, you're disappointed, you're mad, you have learning lessons, you have areas for improvement, but you didn't lose because you didn't try. So I think that's a big one for me, is like the only way that I think I can truly lose long term is if I quit. And if I just keep pushing, then I essentially, like, this is what I tell myself, is like, I can have everything I want if I just don't quit. So, I think a lot of times when things get hard, like they inevitably do. It's business. We're in short-term rentals. There's competition. We have low seasons. When those things line up and you're having all that at once, you're like, holy cow, what did I get myself into? But then I'm like, other people are dealing with the same thing and they're going to give up, and I'm not. And I'm going to be better off long-term because of that grit, really, just the wanting to create a cool life for myself and my family. Like I only got one of them, right? I only got this one life. I want to make it the best I can, be the best I can in all areas. And I know if I don't make it through the trials, through the tribulations, that I'm not going to have the chance at those things that I want. So I just keep going.
Well said, Blake. I love that, man. I think that's definitely true, especially in the STR space, low seasons and competition. So, well said,
Sometimes
man.
it hits you all at once.
Yeah, I totally agree.
A
For
bad
those
guest,
who don't know,
oh man, you throw that in and get a big refund request, and people just barking down your door. You're like, dude, why am I in hospitality? Then you have like really good times. You're like, oh, this is why. You just got to remember the good times when you're going through the bad times.
That's so funny. Oh, last question, then. You see, it just keeps popping up. How often do you guys get bad guests, I would say, per se, in the boutique hotel side of it? It was a little different, right?
That's a good question. I think probably slightly less than average than the typical host. And I say that because like we still get bad guests for sure. But I think a lot of times we divert the situation before it comes up because we have like a really good trained team. We have good systems in place. We've been through this stuff before. So we know how to kind of digress the situation before it gets into something that's really bad. So service recovery is like what it's called in the hospitality hotel space. Mm-hmm. Service recovery is super important. That's like when you have a bad experience or a guest has something go wrong, and it's your job through your guest service, through your hospitality, through your smile, like all that stuff is turning that around to a good review so that they feel like, all right, I had this happen, but I got this in return. Now my level of value is the same or higher of if that problem never happened. So that's kind of service recovery in a nutshell. We focus really intently on that. And then just through our communication, through how our listings are set up, our rules, our house rules, and also we have our rental agreements through Guesty. So we just really set clear expectations of what the guest's getting and what we expect out of them as hosts. And I think we mitigate a lot of problems. And we also we have Instabook. We have Instabook on, but if they don't meet criteria, they have to request a book. And then we just do a really good job and have like a pretty extensive guest screening protocol to really make sure that we're not allowing the red flags that lead into bad guests book our place.
Oh, well said, man. Protocols are important, guys. So definitely look into that. But that's a great way, man. Definitely. We do a lot of those similar things. So we had a bad experience. Long story.
Yeah, you have one super shitty guest. You will do everything you can to put the systems in place to not have that happen again. Because this is headache and lost money. Like the worst things that happen when they coincide with a really bad guest, and you're like, that's not happening again.
Exactly. Well said, man. Well said. But yeah, Blake, thanks again, man, for coming on. Folks, please reach out to Blake for any questions on the boutique side or any way he can help you. I think he's great in all aspects. And to the next episode, peace out.
Thanks, guys.
Thank you.